Hey, and welcome to another edition of Danny Brown Talks Phoenix. I am your host, Danny Brown, and this is our market update. Joined by me is Garret of JFQ Lending. How you doing, Garret?
Doing good.
Yeah.
Thanks for having me, as always.
As always, it's a pleasure to have you here.
Great.
So I figure we'll dive right into it. A lot of positive economic news that came out from last month to this month, and things are looking good. The Fed reduced rates by 25 basis points, as we thought they would.
They did.
The chairman has, signaled that that's probably the last rate reduction that we're going to see for quite some time.
Yeah. There's actually, I think I mentioned it last time, there's this Fed rate tracker.
Yeah.
It just gives a probability of whether or not the Fed is going to continue, what they're in their next meeting, reduce rates or, keep them flat, whatever it may be. Next meeting is December 11th. And, last month there was a 98% chance they were going to reduce them.
I think that they were forced to because
Yeah.
I think the market was expecting it. So
Exactly.
I don't think they really had an option. I know that there was some dissension amongst the voters and some people didn't want to do it, but they ended up doing it anyway.
Yeah.
Did you see any reactions in the mortgage world when they instituted that reduction?
We saw a little bit of a drop, but nothing major. When it comes to the Fed rate dropping rates, typically that's priced into the market, several weeks or even months in advance. The anticipation that they're going to do that is what moves the market. So it's funny because I have clients that call me that are either in process or, maybe just closed on a loan, but they've been, dealing with some sort of refinance or purchase recently. And they say, oh, well, can I get a better rate now? The Fed just dropped rates. And they see that, and I have to explain over and over again.
They should just listen to our podcast.
Exactly, right? But that it's something where they actually got that pricing because they just did a loan a month before the federal rate hike, and so they actually ended up with better numbers than typically what they would get just after. What can happen though is if the Fed decides not to, if something changes and they don't make that reduction, then rates will typically shoot up,
Sure.
because the expectation was they were going to drop and they didn't. So it can go either way in some cases.
Well, I think Powell saying that they're not going to reduce rates unless given a really good reason, kind of sets the expectation that, going through the end of the year and into 2020, that we should not expect any further rate reductions.
I agree.
Hopefully that kind of reduces some of the volatility in the market. Some other things that came out, the jobs numbers were way ahead of expectations. Over 70% of the companies that are on the S&P 500 reported that they beat their earnings in the third quarter. So that was great. My stocks all went up. My Facebook stock jacked up. My Disney stock went way through the roof. And so,
even today, have you checked your Disney stock today? After,
yeah. Disney Plus came out.
Yeah, I know, but didn't it crash right away?
No.
Yeah, I heard that.
Disney Plus didn't. They've had some glitches in the
okay.
system.
I heard there was a big, there was a bunch of issues with the rollout. So could just be.
Yeah, well, I think when you roll something out like that, there's going to be issues, and they were prepared for it. They did some soft rollouts in some European countries, and so I think that they baked that into it. But they reported that Disney specifically reported that they had more people sign up for Disney Plus than they expected. But they have indicated that they're going to be, in the hole by billions for 2 years or so while they ramp this up. But I'm excited for it, nonetheless.
I bet you are.
Yes.
Your Marvel movies. Great.
And Star Wars.
Ooh.
Yeah. So I'm excited.
Okay.
But wages are also up. They grew faster than the rate of inflation, which is what we want. Third quarter real GDP was up. Not significantly, but still up. And, we were going to talk about Brexit, but there's nothing to talk about. That was kicked down to December the 31st. There was supposed to be, that was the deadline.
Yeah.
And, the prime minister said that he was going to quit if they didn't finalize Brexit by the 31st. And surprise, surprise,
he is still
there. So no quitting, and so markets kind of balanced out. And, it's all generally positive news. I think that the stock markets in general like things when they're steady and quiet, and that Brexit being pushed down to December really helped.
Yeah.
the trade war as well.
Yeah.
Reports are out that there's a phase 1 deal in the works that both the U.S. and China are going to sign. I don't think there's going to be a lot of teeth to it, though.
It's a start. It's basically just, it's the first step on this thing. But, one thing with that is that, part of why rates have been low is because this looming, trade war.
Yeah.
All these things happening, in China, and usually when there's
Europe too.
instability,
He's instituted
and
tariffs on Europe as well.
Exactly, and then the whole Brexit thing. With all this uncertainty in the world, that tends to have an impact on rates. Not a direct one, but is something that causes interest rates, typically to be a little bit lower.
Sure.
When things start to, be okay.
Sure.
Sorry, it took me a little while to think of what I was going to say there. But when everything starts to settle, that's when rates tend to start to climb.
Sure.
So now we have phase 1 of the trade talks, that's going into effect, hopefully.
I think
possibly.
I think that is really going to center around farming. I think primarily, some of the less than great economic news is farmers filing for bankruptcy is up over 25%. And I think that's a direct relation to the trade war.
Yeah.
And, middle America is kind of Trump's base. So he really needs this win to help going into 2020, which is the election year. So I think, I think a phase 1 deal will get done. I think the market assumes that a phase 1 deal will get done. But it's a super complicated thing. As we're filming this and as we're recording this, Trump is supposed to speak to the New York Economic Club, and I believe that he's going to be focusing a lot of what he's saying around the trade deal with China. So, what we're reporting on now might be old news by the time this comes out.
Yeah.
Because I don't know what he's going to reference or what he's going to talk about, but that will probably bear some sort of knee-jerk reaction in markets as well. Things that we're still watching, the manufacturing sector is still down, and they're definitely in a recession, and there's still a global slowdown. But the U.S. is in a really solid place, and it's amazing how quickly things can change. Just a couple months ago, we're reporting on what people should do to protect themselves if there's a recession happening, and now all the reports out are, confetti in the air, and things are great, and we're through it. I don't know if I'd say we're through it, but it's looking but we'll
good.
take the win.
Yeah, exactly.
Yeah. So, we're going to be watching all those things and reporting back to you guys on what develops over time. But to report basically on the Phoenix market and what's happening in real estate, we're off to a really crazy start in the fourth quarter. Third quarter finished really strong. Right now, active listings, there's about 14,500 properties on the market. Just to give you context, for us to be in a balanced market, we should be closer to 40,000 homes on the market. So we are still in a very, very low supply market. We did see an increase in inventory in the month of October, but there was no increase in overall demand. That stayed relatively flat. And that's actually reflected in monthly sales. We had exactly the same amount of sales in October as we did in September. So, that demand remained flat. But the active listings is down almost 20%.
Wow.
From this time last year. So
but I know we've talked about this a lot recently, especially with buyers that have come in. You're expecting things to change a little bit at the beginning of the year, right? I mean, there's going to be a lot more people hitting the market, wanting to buy, so demand's going to increase.
Yeah. So the Phoenix market is very predictable, and things tend to slow down in November, December quite a bit. People are more focused on the holidays. When I'm meeting with clients, in fact, I met with clients just before this, they were like, well, if we list now, aren't we going to catch all the winter visitors? And you'd think that is the case, but it's really not. Those winter visitors are coming here for other reasons. They might look at real estate while they're here, but that's not why they're here. They're here to be with family or the weather, that kind of thing. And they too wait until after the holidays to really start doing anything with real estate. That's why we see this uptick in inventory in the fall to try and catch our winter visitors, but there is not an increase in overall demand. So I think that, people are kind of kidding themselves or getting bad info that they're going to be targeting that winter visitor market.
Would you recommend then waiting till after the holidays? Or, because I feel like I've heard arguments both ways.
Yeah, it depends on your situation. So, yes, we've got probably half a dozen listings right now that are all ready to go live that second week of January into early February. Those individuals are wanting to time the market, aren't in a hurry, want to ride out the holidays with their families and do what they need to do after January 1 and then list kind of that second week in there and after. So, yeah, if you can wait, I would recommend waiting until after the holidays. Conversely, we're having our best November ever. So we have more closings in the month of November than we've ever had since I've been in business. And so I think that there is still buyer demand out there. And I think that it's probably left over from the springtime.
Because there's been a lack of inventory.
Because of the lack of inventory.
Found.
Yes.
And then also I feel like, this time of year, the buyers that are out there are a little more serious.
Correct.
They're the people that aren't putting things on hold for the holidays. They want to get into a house right now, and that's why they're out looking. So, you may not have as many of them out there, but the ones that are out there are going to, are probably putting in offers, and they are more serious about buying. So.
Yeah, and what can be, this can be an advantageous time for buyers too. There's less buyer activity on the market. The listings that are available tend to be serious sellers or sellers who have been trying to sell for a while. So as a buyer, if you're looking for a home right now, you could have the ability to negotiate harder than you could in the spring market when there's a lot of activity. So you're going to be facing less competition. The sellers who have been on the market for a while, you could beat them up a little bit more on pricing. And so this could be a good time to purchase a home if you're ready. What I'm predicting is going to happen into the first, second, and third quarters of 2020 is pricing is going to skyrocket. We're already up 9% from this time last year in overall pricing. Yep. The average sales price is $285. This time last year it was $262. Wow. And we're up 2% from last month. So pricing is a lagging indicator of what's happening in the market, and we're just now starting to see list prices reflect that. And so, everything's based on supply and demand. Supply is low, and we get into the springtime, and demand's going to be high, which it always is in Phoenix. That's going to put a lot of pressure on pricing. So if you're a seller and you're not looking to buy in Phoenix, again, I just had this conversation not more than an hour ago. You have to think about, if I wait to list and pricing is going to go up, that's great on the sale. But if I wait to buy, those prices are also going to go up. And so the ratio, usually people are moving from a cheaper house to a more expensive house. So you just have to decide.
Just 2% of 500K is bigger than 2% of 100K.
Exactly.
It's a bigger gap
yes.
there. So.
Yes, you simplified exactly what I was trying to say. So that's exactly my point, that yes, the value of the home that you're in could go up, and it will, next quarter and into 2020, but so is the home that you're going to buy. And interest rates could also go up, which is also going to affect your affordability. Yeah. So if you're a buyer, and we're having buyer consultations now, and we're telling our clients this now, that if you're not super choosy, I don't think you should rush into anything. I don't think you should buy something that you're not in love with. But if you're buying based on an investment and affordability, then getting in before these prices really start to skyrocket could be advantageous to you.
Got it.
So that's kind of what I'm predicting is going to happen into 2020. Do you have any sort of predictions about what interest rates might do to affordability going into 2020?
So as of right now, while we're filming this, we're at a 3-month high in rates. The last few months have been this really low point, and they've started to climb. As the trade talks, continue on, that's going to have an impact on it, like I said before. The Fed, already made their rate cut, and they're not going to do another one. At least all the indicators, definitely not for the end of the year, and from what I'm seeing, at least not into the first quarter or 2 quarters of next year. So I think the market's starting to correct itself a little bit. We saw this big drop where we had a low point, I think, early October, and then they started to shift upwards since then. And I think, I think they were a little bit too low at that point. There was a lot of stuff coming out. You had the Fed talking about reducing rates still. Brexit was still on the horizon, which it still is. But
I've never seen a market react so much to Twitter.
Yeah.
It's amazing that how just one single tweet just impacts the stock market and the sky is falling, or
well, it depends on who the tweet's from.
Yeah,
obviously
things
if it comes from our president,
yeah,
then it's I think everything that I'm seeing is telling people to lock in. It's a good time to buy, and try to beat some of the rate hikes that are going to go into next year. It's a good time to refinance. I always say that, but I think
you do.
I was actually telling clients, a few weeks ago, let's wait until the end of October, to lock your pricing, because I think we might see a little bit of the drop with Brexit and with the Fed rate reduction. I think that I just thought that was the best time to lock in. And then we had literally one day of a slight drop, and then they started to climb again. So, now I'm telling everybody to lock in, get started as quickly as possible. Because I think next year, rates ultimately are still incredible, and I think they're going to be incredible.
They are based on, historic
lows. I remember back before the crash, when I was doing mortgages in 2006, you had to pay a colossal amount of money to get a 6%, So, the fact that you can still get rates in the 3s and 4s is incredible. So I don't think we're going to see anything crazy, but, 2018 rates skyrocketed. They went up, I was seeing rates a 1.5% above where they were to start the year. So it could happen like that again. I don't think it's going to, but
I think a lot is going to come out of this holiday season. Mm-hmm. We're going to find out how strong the consumer really is, and how the economy is really doing. GDP is still up, but it's all on our shoulders as consumers. As long as the consumers continue to have jobs and aren't fearful of losing jobs, then I think that the economy will continue to kind of chug along into 2020, into next year. And so this holiday season will tell a lot. Some of the market volatility that could come up is, again, with the trade war. There's a ton of about the tariffs and an increase in tariffs on everything from Europe to China. And if some deals can't be signed, I'm guessing that Trump will stick to his guns and institute those, and let the fallout be what it is.
Exactly.
So, we're here to report on that. I know that we always say it's a good time to sell, it's a good time to buy. I think the important thing is to do what's right when it's right for you, and not to necessarily time the market.
Yeah.
What we're trying to convey is what we think will happen in the market, and when the best time to do something could be for you as an individual in terms of timing. I think it's always important to remember that there's always buyers out there, regardless of the timing. And there's always going to be properties listed for sale. And if you miss out on one, there's always going to be another. It's just a kind of a constant thing, and not to get too hung up on all the data that we throw out at you. But, I think we're in a good position. I know we've reported on this before, that I don't see a recession in the near term. There will definitely be something in the future, but not in the near term. I think that we're sitting okay.
All right.
Cool. Well, thank you guys so much for tuning in. Make sure to send us your questions. This was our October market update. We're in November, so I always have to get that right.
Yes.
So we appreciate you tuning in. If you have any questions or comments on any of the information that we reported on, please let us know. And Garrett and I will see you next month.